Welcome back. We are continuing our conversation with Kevin Hebner, Managing Director, Global Investment Strategist at TD Epoch. Kevin, okay, part three of the conversation. So we've talked about, why China is rising in dominance. And now we shift to take a look at the U.S. dollar. It's their position to lose, I guess. That's the first thing to start with. I thought it was interesting you started your report talking about, not about currency, but more about de-risking and the idea that, throughout history, you see these cycles where people decide they have to de-risk whether power is too concentrated or semiconductor power is too concentrated. This is a parallel to those conversations.
Yeah, so as we move sort of from a unipolar world to a bipolar world, we're realizing that there's lots of risk and vulnerabilities, particularly in global supply chains. So from the position of the US, Canada, Europe, and other sort of Western countries, we realize that there's vulnerabilities in terms of getting your energy from Russia. There's vulnerabilities in terms of semiconductors if we're very reliant on supplies from Asia. And so we've decided to de-risk those. Similar, China, Russia, Iran, and other countries have realized they have a real vulnerability, a risk exposure to the US dollar financial system, and they need to de-risk, reduce their exposure and vulnerability to that. And I think that's ultimately what this is all about.
And then when you go into that, you start to talk about just all the reasons why I think people want to de-risk. And you alluded to this earlier, but you talk about weaponized interdependence right now. And you talk about how, the Biden administration, what they've been doing compared to previous administrations. Maybe just take us through how much that has increased, I'd say, the weaponization of the US dollar.
Yeah, so weaponized interdependence is a very good term. And clearly that's what Russia had in mind with supplying natural gas and oil to Europe. And I think that's a good way to think about it. And certainly with the US dollar, they've decided to weaponize the dependence that Iran, Russia, and other places have to the US dollar. So I think that's a good way to be thinking about this.
And it works until it doesn't, I guess, would be probably a good way to think of it too, right? I mean, it works as a weapon until people find alternatives. So, but you have a chart here, I think was looking at the number of, I think, states that are actively targeted by U.S. sanctions. I think it's 4, if I look at back in 2000, up to, just under 25 currently. So it's becoming more common.
Yeah, so the number of states under sanctions has increased sixfold in the last 2 decades, and the number of sanctions overall has increased more than tenfold. So it is something that the U.S. dollar is using, and really they're forcing other countries to come up with an alternative to the U.S. dollar financial system. And one complexity in this is there's primary sanctions. So if the U.S. decides to put in place sanctions against Iran, that means any U.S. individual or entity cannot interact financially with entities or individuals in Iran. So that's primary. What they did with Iran in 2018 is they took it another level up and they introduced secondary transactions. So they said that the U.S. individuals and companies can also not transact with anyone who is transacting with Iran. And so what that meant, for example, is a European bank who has business in Iran, and certainly they have a different position on Iran than Americans do. They had to choose, do I want to be doing business with Iran or with America? And in the vast majority of cases, they chose America. And it's interesting that before the Russian invasion of Ukraine last February, the region that was most interested in decoupling from the US dollar was Europe, because they realized that there was this potential for financial sanctions, U.S. foreign policy being imposed on them, and they were very unhappy about this. With the sanctions against Russia, America has decided not to have secondary sanctions. So, for example, India is not signed on to the sanctions, but America could force them through secondary sanctions, but realizes there would be a huge backlash to do that. Really, there's countries with 2/3 of the world's population are not on board with the sanctions against Russia. So there are real limits to the ability of America to push both primary and secondary sanctions. I've
only got about 3 minutes, Kevin, but I do want to mention, because it takes up a big piece of this report too, you talk about the Chinese military industrial complex companies, how they're affected, and Chinese persons who are also affected.
Yes. Yeah, so the U.S. has sanctioned a lot of Chinese entities and Chinese individuals over the last couple of years, and there's for a host of reasons. One are companies that are linked with the Chinese military who are doing activities outside of China, which could be related to different types of forms of surveillance. It could be activities that are viewed as anti-democratic protests or human rights abuses in the Uyghur areas, Hong Kong, and so forth. So there's a lot of entities, and that certainly has gotten China's attention. So they realize that these sanctions are painful. They can precisely target individuals and entities, and they can be broadened. And certainly there's every reason from the discussions that are coming out of the White House to believe that these sanctions against Chinese entities and individuals will be broadened over coming years.
We've only got about a minute, Kevin, but again, my favorite part of your report is when you quote Niall Ferguson stressing that the law of unintended consequences is the only real law of history. And the thing is, it's hard to say how this could unwind, accelerate, change, but the path of acceleration could be concerning.
Yes, absolutely. And so we have, even if we become a bipolar world, the two worlds are very interconnected in terms of trade, economics, financial. And so as we move to this equilibrium, this transition, I think we really do have to pay attention to Niall Ferguson's warning about the law of unintended consequences, how this is going to play out. We've been surprised so many times over the last couple of years, and we're continuing to be surprised.
Kevin, it was a real pleasure. Thanks for taking the time to take us through this.
Thank you very much, Kim.
Kevin Hebner, Managing Director and Global Investment Strategist at TD Epoch. That is it for our show tonight. Thanks so much for watching. Any comments or questions, or if you'd like to get in touch with us or an advisor, you can email us at moneytalk@td.com. And please be sure to check out our daily show, Money Talk Live, which airs weekdays at noon on TD's web-broker platform, hosted by Greg Bunnell. There's a look at the guests that are coming up. They're fantastic. Again, on the platform, on WebBroker, you can send in your questions, and those questions will be answered by the guests. Thanks so much for watching. I'm Kim Parlee, and we do hope to see you again next week.
The preceding paid commercial program was brought to you by TD Wealth.